With almost half of the S&P 500 companies reporting their earnings so far, it seems as if US recessionary fears are starting to fade. But that's not the same overseas. Stay tuned for the rest of the video to see what happened in the markets last week, as well as some of the major stories from outside of the United States. All four of the major US indexes were positive last week, and the Dow Jones was the only US index that was up just under 1%. The other three were up all over 1%, while the NASDAQ was up almost 2%. Foreign and emerging market stocks were both up over 1% last week, with the emerging markets leading the way, up about 1.7%, and now almost up 10% year to date. Last week, we talked about the US markets and how close they were to all-time highs. And as we're shooting this video on Monday morning, the S&P 500 has broken out and made new all-time highs. But I didn't want to go over the exact same chart as I did last week, so today we're going to take a look at the emerging markets. Now, the emerging markets made a strong run at the beginning of this year through April, but since then have been trading in a channel. And this channel is set up what's known as a bull flag. And if you look at the far right of this chart, you can see that the emerging markets are close to breaking up above the top line, which is the top of the flag. And this would be good for the emerging markets if this were to happen. But we're ultimately looking for a move in the emerging markets back up over 1150, which was the high from April. And if we saw a move like this happen back over 1150, that could be a very good thing for global stocks. 200 of the 500 S&P 500 companies have reported their earnings so far. And of these 200, only 32 companies have mentioned the word recession on their conference calls. Now, earlier this year, the word recession was a hot topic, as almost all of these conference calls we're talking about a US recession in one form or another. But this has changed to more of a narrative of slower but stable growth for the US economy. And this is mainly due to economic optimism and hopes for a US and China trade deal. And now, as I mentioned earlier, the S&P 500 is right at its all-time highs, and as we're shooting this video, have just broke through and made those new all-time highs on Monday morning. On Friday, the Office of U.S. Trade's representative said that the U.S. and China are close to finalizing and have made strong progress on closing their Phase 1 deal. Now, the Phase 1 deal may halt the tariff war for now, but it won't be rolling back any of the tariffs that have already been put in place. Now, since the beginning, the U.S. and China have been trying to figure out how to stop these tariffs on hundreds of billions of dollars worth of each other's goods. With that being said, analysts are still not hopeful that there will be any type of agreement reached outside of this Phase 1 deal on any new issues before the end of the year. The last story of the week had to deal with Europe. And about a third of the European companies have reported their earnings so far, and signs are pointing to what's known as an earnings recession. Now, the majority of companies in Europe have beaten their expectations, but profits are shrinking for the second straight quarter. Now, the consensus for the Stoxx 600, which is equivalent to the Europe's S&P 500, is that third quarter earnings growth is about minus 2.8%. But the positive is that if you take out Europe's energy sector, the earnings growth is up about 1%. Even with the overall negative earnings, 58% of European companies have beaten their earnings estimates. About 63% of these companies have beaten their sales projections. The Stoxx 600 continues to reach new yearly highs. For the week ahead, about a third of the S&P 500 companies are going to be reporting their earnings, but the biggest news story will be on Wednesday when the Federal Reserve announces their much anticipated interest rate decision. Thanks for watching today, and for more content, you can check out our Facebook page, our YouTube channel, and our LinkedIn page.